Dividend kings are an elite group of stocks that have increased their dividends every single year for at least 50 years in a row. And just like this article says, it's not surprising that a relatively small number of companies each year can reach this benchmark. Because let's be real here, for a stock to keep raising their dividend every single year for 50 years in a row is very, very impressive. Now in this video, we're not only going to go over 5 specific stocks that all have increased their dividends for over 50 years in a row, but every single one of these stocks that we're going to go through could be potentially offering a buying opportunity as of right now. So if you want to see which stocks we're talking about, which stocks made the list, and which names are potentially on sale as of right now, make sure to drop a like down below, stick around, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first stock that is in fact a dividend king and is potentially offering a buying opportunity, at least slightly as of right now, is ticker symbol LOW or Lowe's. Now years ago, I added Lowe's into my portfolio along with Home Depot because they were both on sale post 2020. And since then, I regrettably actually sold off my shares of Lowe's, and at this point only hold some Home Depot. But to look deeper into Lowe's, as of right now, it is offering a 1.89% forward yield, which is on the smaller end as far as dividend yields go. But keep in mind, Lowe's dividend growth rate is pretty decent and it is consistent. Now, Lowe's is, of course, a very, very safe dividend. According to Simply Safe Dividends 93 in the safety score, Lowe's dividend is just about as sure as any across the markets. Lowe's is a little bit higher beta at 1.11%, which is one of the other reasons on why I'm not a huge fan of holding too many shares of Lowe's. I normally like to hold on to single stocks that have a beta less than 0.5. Now, I promise Lowe's is in fact a dividend king, and here we go, 63 years of consecutive dividend increases and 63 years without a dividend reduction. Now, to give you some more perspective on how fast Lowe's dividend growth has been over the last decade per se, in 2014, Lowe's was paying around 75 cents more or less on a yearly basis, and in 2024, we're talking over $4 per share per year. Or to be even more specific, around 5% dividend growth in the last year, 19% in the last 5 years, and 24% in the last 20 years. So like I sort of mentioned, even though Lowe's isn't offering the biggest dividend as of day one, if you're looking to buy some shares and hold them for a while, you're going to most likely get paid more and more cash flow over time buying into Lowe's. The next dividend king that's also been paying dividends and raising dividends for over 50 years is one of my actual personal holdings, FRT or Federal Realty. Now, Federal Realty currently offers a 4.24% forward yield, so it is on the higher end, but keep in mind it is a REIT, so you are going to get a higher starting yield. The dividend safety for Federal Realty is 70, so definitely pretty safe, although there are some REITs like Realty Income that I would consider a little bit safer. Now, although Federal Realty has in fact increased their dividends for 56 years in a row and paid dividends for 62 years in a row, the dividend growth has been sort of slow. We're talking just under 1% in the last year, 1% over the last 5 years, and 4% on average over the last 20 years. So this is not necessarily a dividend king that's going to pay you a ton year over year necessarily, although it still does fit in the category as a dividend king because it has paid dividends for more than 50 years. The next dividend king and a stock that I've held on and off over the years is ticker symbol J&J or Johnson & Johnson. Now, Johnson & Johnson is a great anchor stock for really any dividend growth portfolio in my opinion. And this might especially be the case because of where it's trading as of currently. It's trading at $150 per share, which is considerably lower than where it was over the last 5 or so years. Now, J&J does have a pretty low beta, which is one of the appealing things as far as J&J for my portfolio specifically. The dividend safety is about as safe as it comes across the market comparing it to any other stock or ETF really. And J&J has in fact paid dividends for 108 years without a reduction in a row, and also has been raising their dividends for 61 years straight. And J&J, although not the fastest dividend growth, has actually had some decent stats. We're talking around 4.2% the latest year, around 6% over the last 5, and around 8% on average over the last 20 years, which is on the faster end of things. In 2014, we're talking around $2.80 per share per year in dividends, and now as of recent, just under $5 per share per year, which is significantly higher than what we saw 10 years ago. So because J&J is low beta, it's not going to whipsaw the portfolio around all that much, and for the fact that J&J could be offering a buying opportunity with where it's trading as of right now, which is giving J&J an accidental high yield. And what I mean by that is that if you look at the 5-year average, there were very few times over the last 5 years where J&J was offering a starting yield of 3+%, 3.3% as of right now to be exact. So for those investors looking to build out some staples in their long-term dividend growth portfolio, J&J could definitely be one to add to the watch list. The next name that I've considered holding over the years but haven't actually added it to my specific portfolio is Colgate. Now Colgate, as of right now where it's trading, is not necessarily offering the best buying opportunity. If you look at the 5-year average, the yield is on the lower end. But Colgate as of right now is offering a 2.25% forward yield. The dividend safety is 90, extremely safe, and the beta is very low. So sort of like J&J, a staple foundational position in your portfolio that you can kind of buy some shares of here and there, and you don't really have to worry about it all that much, at least in my opinion. Now, as far as dividends go, 129 years without a reduction, and on top of that, 61 years of consecutive increases. Now, compared to some of the other names we went through, not the fastest increases across the entire board, but around 4% over the last year, 3% over the last 5, and 7% over the last 20. And to give you some more perspective, around $1.50 per share per year in dividends around 10 years ago, and now as of recently, just around $2 per share. So the fact that Colgate isn't offering the fastest dividend growth, the fact that it's also trading towards the upper end of where we've seen over the last 5 years, might not be giving this one the best buying opportunity. But sort of like J&J, for those investors looking to maybe get started, build out a portfolio, set some foundational positions, Colgate could definitely be one to add to the watch list. Now the last and final dividend king that we're going to go through in this video is ticker symbol MMM or 3M. Now 3M definitely has been going through some issues over the last maybe say 2 to 3 years now, and the price definitely reflects that. I used to own a ton of 3M. Luckily, I sold out of most of my shares before it really started to dip over the last few years, although I still do have 3M as a position in my long-term portfolio. Now, as of right now, the forward yield for 3M is 6.47%, which is massive considering what this stock was offering just say 3 or 4 years ago. Now, 3M's dividend safety is rated as a 40, or better said, unsafe. And the outlook for 3M's dividend is very unknown, although at least as of right now, just going off of the stats, 3M still is a dividend king, 64 years of consecutive dividend increases and 108 years of dividends without a reduction. Now, will we see a reduction sometime soon here for 3M? It's very possible, although just as of March, we did not only just see a dividend, we saw a dividend increase from $1.50 per quarter to $1.51 per quarter. And this definitely shocked a lot of dividend investors that thought maybe 3M was going to cut their dividend a little bit lower, or if nothing else, not raise it. But sure enough, 3M actually pulled through with the raise, which I didn't mind because, like I said, I am a shareholder. Now, 3M definitely has some issues ahead, but that's why you're going to be getting paid a pretty penny as far as income from the dividends if you do partake and invest into this one. Not necessarily a single stock that I'm going to be adding to my long-term portfolio anytime soon, but something that you could add to your watch list and keep an eye on, and of course is in fact a dividend king. So there we have it, 5 different stocks that are all dividend kings that have not only been paying dividends for the last 50 plus years, but increasing their dividends every single year accordingly. Now, out of every single stock that we went through in this video, if you could only choose one of them to buy as of right now, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.